Welcome to today's webinar, Will SMEs Survive COVID-19? We presented this a month ago. A lot's happened since then. We're now, I think, into the 11th wave of our SME COVID-19 tracker. So today I have with me my business partner, owner of ACA Research and Fifth Quadrant, James Organ. James, welcome.
Thanks, Steve. Good to be here to provide another update with regard to the survival of SMEs.
We'll be taking you through the latest data that we have. Looking back, James, now we're up to this period where cases have now dropped. Certainly, feels like we are moving into another phase of this. Can we call it a crisis still?
Oh, I think we can call it a crisis, and I think there's still a great deal of uncertainty associated with the recovery process. And so, as much as there's not many new cases and the number of infections is reducing, ultimately that doesn't mean business is going to bounce back in a robust fashion that ultimately is required.
Absolutely, and obviously, we are seeing those cases falling, and number of new community transmissions, etc., seems to be under control, but we still don't have state borders open. We still don't have any international travel to speak of.
No, so Australia ultimately can't survive off Australia for forever, and it's going to have to for a reasonable amount of time. And I think in the initial stages of this crisis, there was expectations that this would run for quite a long time, and then potentially, as we dealt with it reasonably well in Australia, then expectations changed to say, well, we will rebound quite quickly. But I'm not sure that people are necessarily comfortable with that conclusion at this moment in time, as other countries around the world are handling it in a less effective manner, which ultimately means that it will continue for the foreseeable future and more, one would expect.
So the next 3 months are fairly critical in all of this.
The next 3 months are extremely critical, and we need to see numbers bounce back. And then the 3 months after that will be the make or break one. One assumes, depending what the response is from the government and what the response is ultimately from the economy over that period. So these next 2-3 month blocks are really important and very difficult to predict with or without the research, to be honest.
Absolutely. Well, let's jump into it. Before we get into that, let's just recap where we are in terms of the current state of the labour market. So stats came out.
These stats came out yesterday. Has the XXX in the takeout line. Sorry about that.
That's
back to you, Steve.
Thank you very much, Dave. But look, what we're seeing is that we still have a problem with labour underutilisation. It's still sitting where it was before. There's a bit of a lag in these numbers. May the 24th, I think, is the cut-off date when reports yesterday. So clearly, what we're seeing through the tracker may indicate that when we look at this in a month's time, the impact of what we're seeing in the tracker in terms of this, a bit of a bounce, but we may see these unemployment numbers potentially dropping a little bit.
Again, apologies for the slide. A couple of numbers won't update, but fundamentally, I would expect these numbers to change for June, as clearly in industries like hospitality and retail picking up, and therefore taking on more staff or re-employing staff or taking on casual staff, depending on what they need. But again, the current, I suppose, level of sentiment is somewhat optimistic, and it's the sustainability of that optimism that we're really looking for at this moment in time, as opposed to the ups and downs that we've ultimately been experiencing with the research throughout the process.
And as we said, we are in a probably kind of third phase of this pandemic, and there'll probably be a fourth and a kind of fifth phase, hopefully, which are more progressive, but we don't quite know yet what direction it's going to go in. So revenue declines. Now, this is encouraging. We've got the strongest revenue figures reported since wave one. We're seeing that those, reporting a decline is now back down to that kind of 66%, 2/3 mark. There's still a significant chunk of businesses experiencing a revenue decline, but the direction of this is encouraging.
It's encouraging, but it's important, that we don't get carried away with this. We've still got 47% of SMEs reporting more than a 30% decline in revenue. From our perspective, from our business perspective as an SME, we've certainly seen a stronger June and July and August look okay as well, where April and May were crap. yeah, it's encouraging, and it reflects what we know, it reflects what we're seeing. But these numbers need to change, and they need to change quickly. I mean, we're 100 days out or less from when this wave was conducted, and we need to see these numbers continue to reduce in terms of these declines. We need as many of these people to get back to some level of reality. But yes, obviously the numbers at the bottom are important. The 57 on the 5th of April versus the 57 on the 7th of June. Hopefully we can report next week that it's closer to 50 and so on and so forth.
We'll look at future revenue expectations, but we are only 3 and a bit months away from the end of much of the stimulus package as well. The direction of these revenues going is going to be critical in terms of informing what happens next.
Correct.
So yeah, let's look at that, where we think things are going to be in 4 weeks' time. So again, it's encouraging. We've seen that the percentage that think their revenues are going to be better in 4 weeks has gone up from 22% on the 3rd of May to 39%, and it's pretty much steadily increased at 17th, 24th of May, kind of stays fairly static, but then we've seen that kind of kick on for that final week in May, and as we move into June. So is that, I guess the question is that enough of a uptake in future revenue to counteract what we saw on the previous slide? That.
Well, it is if the trend keeps going. 17th of May we're at 30%, and the 7th of June we're at 39%. So in 3 weeks' time, we're at 49% and so on and so forth. Then we get to 70 or 80% by the time that the stimulus runs out. You can see these trends; they seem to go in 2 week blocks. So you've got 21, you've got 22, 23, then 30, 28, then 38, 39. So if the next two go up by another 5% and we continue, again, we'll be going okay. But it's just critical that we're not just seeing expectations based on a level of underlying sentiment that is not true. But again, let's consider the glass half full and say that it's encouraging, and it's going to continue to be encouraging. And as we continue to unwind restrictions, then these numbers will continue to go up.
And those declines, again, the percentage declining, obviously, start of May, that wasn't looking good, and that's again leveled off a little bit.
Correct.
Let's look at that by industry, and again, you can clearly see that as cafes and restaurants and so on are opening up, the hospitality sector's experiencing something of a bounce back there. We're definitely seeing healthy numbers there with over 60% there.
Yeah, so you have to be careful how you interpret this slide, of course, because hospitality are coming off pretty much zero, and so therefore, if they weren't getting significantly better, or as in most cases, slightly better outcomes, then there would be a serious problem. But you do see a complete dichotomy from the 3rd of May to the 7th of June. So it's obviously more positive there. But then you look at the production category where there's not much change. That's because their revenues weren't impacted as much. I think it's important that we're looking at construction where we've which obviously employs a lot of people, and where stimulus has been directed recently, so that's brought their confidence back, which is great. And services, which I've highlighted before, is the biggest industry sector within the SME market, and therefore, if the services sector goes backwards, then it impacts on a lot of other areas, and hence that jump from 31st May to 7th of June is very encouraging. Retail obviously picked up a little bit, and hopefully that will continue. Distribution is an interesting one, because distribution ultimately services all of these other industries, whether it's hospitality, retail, production, construction, etc. So why is distribution going down? These are capital intensive businesses, a lot of these as well, and when they've got a lot of financial issues on the line as well, it gets very tricky to manage. But the fact is that it's not helped by closed borders, and we know that supply chain issues are a problem, and we know obviously there's less products probably coming into Australia, certainly obviously leaving Australia. So distribution is a bit of a worry at this moment in time, because we need those businesses to be there to move stuff around, obviously.
100%. So looking at when businesses expect revenue to return to pre-COVID levels, some are already kind of seeing that. A third are seeing they're already at pre-COVID levels, so that's encouraging.
Yeah, so again, we've come off, 23 weeks of 27% and then moved up to 34%. So, that increase, if that increase continues to happen, then again, we'll be in a reasonable shape by the end of stimulus on the 27th of September. I think the natural date is the payments don't happen till October. But yeah, so if again this trend continues, then hopefully we'll be in a better space. There's more people saying, or there's less people, saying it's too hard to predict. So there's clearly a greater level of clarity within these businesses, and obviously if you've got a level of clarity, then you can make decisions. So we look at the numbers, we look at the trends within the 2021 side of things, and those are not dropping at 100 miles an hour. No, so that 53% needs to shift, and it needs to shift up reasonably quickly, but it is very good that we've got 34% that are actually back to pre-COVID levels.
I think you're right. Those businesses that are identifying this period in 2021, those would be the businesses that we would be more concerned about their longer-term survival.
Yeah, well, so we've got to get those guys through the danger quarter, which is October, November, December. So if we don't get those guys through there, then if depending again which sector they're in, but if they're a business that's dependent on Christmas, or the opposite, they're a business that goes really slow through that December, January period, they might not make the first half of 2021. So so it's getting those guys through that period is going to be there's going to be some hard decisions that have to be made by people cleverer than I am.
There was some interesting research from the UK that we looked at, which indicated that the end of furlough in the UK is likely, potentially businesses are going to be laying more staff off. Do you think that is going to be the case over here as we kind of reach the end of the stimulus period, that the impact on unemployment may well start to see a spike, and we'll see that spike, unfortunately around Christmas time? Is that a prospect?
I mean, there's speculation. I mean, there's you also have to take into account how people answer those types of questions when there's a vested interest ultimately in extending stimulus packages as well.
Of course.
Same with our research. But yes, it's an interesting thing, because the way that businesses operate has clearly changed for many, and therefore the learnings that a lot of these businesses have taken out of this social experiment, which it ultimately has been, has taught them that maybe that they don't need as many people, they don't need people working in offices, they don't need the structures that have been in place. And so therefore the likelihood is that things will change in terms of the number of employees in October, with or without a strong recovery. And if we don't have a strong recovery, then we're definitely going to lose jobs. But we could lose jobs even with a strong recovery, because businesses are choosing to do business differently. And so therefore, there's going to be a lot of employees that will potentially be looking for jobs based on that, in my opinion.
One question I was going to ask when we looked at the revenue numbers was, obviously we don't necessarily see that through the lens of profitability, but clearly, there are a reduction in headcount. If revenues are maintained and we're seeing a reduction in headcount, potentially that leads to more profitability.
And correct. And I mean, and ultimately you restructure business, and the business becomes more effective. And because it's more effective, it makes more money, and then you employ people in different areas, different jobs, doing different things. And whether it's a digital capability, a technology capability, an innovation capability, as opposed to I'm a manager of people, and really what am I actually doing, because I've proven that these employees of mine are quite capable of managing themselves at home. They're quite capable of being very productive without having to be managed all of the time. They actually get on better when they're not on top of each other all the time, and therefore you get better business, and you get a leaner machine across the economy. It's just going to take a reasonable amount of time to get to that stage.
So let's look at this a little bit by industry sector. Percentage that are going to, see that return again. This doesn't look quite so good for hospitality, does it? But again, going back to the sectors where we're particularly concerned about, services, still that's still pretty much in line with 55%. There's still 45% that aren't. So
there's a long way to go. And again, I mean, in its simplistic form, I mean, you can't, if you're in the hospitality game, you cannot pick your revenues up if your cafe's in the middle of the CBD and only 30% of people who are at work. It's just not going to happen. So hospitality, retail, the same bucket. We've spoken about distribution and construction because of the stimulus is working well. Production now, they had a big lift through the early stages of the crisis because people needed stuff, and so they were making stuff, and now demand's probably dropped off a little bit, so there's a little bit of uncertainty there. The services sector, is about average. So there's nothing, overly confident within those numbers on that slide because, there's a reasonable amount of room to move. But at least generally there's an upward, I think that there's hopefully an upward trend there.
Yeah, do we have to be concerned at this stage about increasing level of bankruptcy? Obviously there have been changes to bankruptcy laws to protect businesses and
yeah, I think Bill Lang might be on the webinar. He's been talking about this for quite a while in terms of bankruptcy protection. Whichever way, there's a lot of small businesses that don't have a lot of financial latitude and a lot of ability to access money and borrow money, etc. So yeah, protecting people from bankruptcy is a good thing. But then, we're protecting people from bankruptcy, we're protecting people from landlords, we're protecting people from themselves, and we're protecting people, laying off staff, etc., etc. So at some stage, it'll come down to the good businesses survive and the bad businesses don't, I think. And but there's absolutely no doubt that something will have to be done between September and 2021 in terms of helping some of these businesses that haven't had the time to recover that they've required.
Well, let's have a look at some of those, challenges. Obviously, cash flow still being a really critical challenge, but looking at the core business challenges, this, and what's changed. So it is, you talked about issues around distribution, but the big changes here that we're seeing are restricted travel movement now is becoming a bigger challenge, supply chain issues, and raw material costs. Does that have implications for ultimately downstream implications for retail pricing as well? Is this potentially going to have an inflationary effect in the economy, cost of goods?
I can't see. I'd be surprised if there were inflationary impacts. I just don't think that retailers could be in a situation where that they can pass a lot of these costs on. So it's unlikely there'll be an inflationary situation. But again, when we've highlighted those three things. Fundamentally, all of these challenges are challenging. There's some big parts of those bars that are red and orange, and we shouldn't forget that the number one is not knowing how long the crisis will last, and it continues to be the key element. If you don't know, you can't plan, you can't measure, you just don't know where you're at, and so that is an issue. And again, that's why people need to know when these state borders are going to open. I think Northern Territory have said July the 17th, which seems an awful long way away to me. This is certainly the issue now, that people need to start moving around to be able to stimulate the economy, whether it's because they're travelling on holidays or whether because they're travelling on business, doesn't really matter. The supply chain issues are obviously causing issues. We know that the distribution industry is suffering because they can't get access to products that they were previously distributing, and there's probably some pricing issues going on there. And obviously with closed international borders, that doesn't help with the movement of goods either. It's a difficult situation, and I don't think borders being closed for another month, I think that's pushing it really close against the end of the stimulus. For that then to rectify itself in that 2.5 month period, I just think is a big call.
So looking at this both sides of business, point about international borders, for example, that's clearly a more significant issue for those larger organizations, because again, they're more likely to be exporting, they're more likely to be trading, they're more likely to have overseas offices, etc. And there's only kind of so much that you can do on Zoom or Teams. So that's becoming an issue for those. And certainly I don't think any modern economy can really kind of sustain itself for a long period of time without some level of international travel.
No, and certainly Australia, with a small population, it needs international trade. And again, those larger organisations, those larger SMEs, probably got the financial wherewithal to be able to protect themselves. But the ones, the 20 to 99 employees, we've seen for a long time in the data that they're the ones that have been really put under pressure. When you've got that many people, it's difficult enough to organise online meetings and video conferencing and get that right by the looks of it, let alone trying to get paid, get capital, they're the ones with the biggest issues around keeping the workforce. So it's a challenging sector, the 20 to 99. I mean, a lot of family-owned businesses that, where people have spent their lives building up these businesses to be significant, and they're difficult businesses to run because they're still small, but they've still got a lot of expense associated with them, a lot of infrastructure associated with them, and I would suggest that a lot of those businesses will shrink because of the COVID crisis.
Those mid-sized businesses are significantly more challenged than the smaller businesses. It's cash flow problems and uncertainty.
Yeah, I mean, with small businesses, micro businesses of that size, I mean, obviously it's very easy to be agile and stop the bus more quickly, minimise your operating costs, etc. So it's a lot easier for those guys. They said the ones at the bigger end have probably got more cash to be able to manage that, but those in the middle, especially the large middle, are under significant cost pressures.
So I thought this is a kind of really interesting question that we asked about level of comfort and what people are comfortable to do. So we've got still restrictions around a lot of interstate travel, but there seems to be a pretty positive level of comfort around that.
Not bad. I mean, obviously, it was the first time we'd asked this question, and I suppose I was surprised to some degree that the numbers were the same for the decision maker versus allowing employees. I thought the decision makers would be keen to travel, but not necessarily allowing their employees to travel at this moment in time. So people are becoming comfortable with travelling, but obviously, if the borders don't open, then it doesn't really matter. I think Jetstar were doing the $19 deal this morning when they Sydney to Melbourne. So So everyone was buying those tickets. So not that might impact the business world as much as the leisure world, but anyway, it's good to see those things happening to encourage people to get onto aeroplanes and again increase economic activity.
Negotiations around Virgin are still at a fairly delicate stage.
Yeah, that's right, and that's not going to help either if Virgin doesn't come back a degree of strength that's required. I mean, we need Virgin servicing those holiday destinations as well as the Sydney Melbourne route and that kind of thing. So I don't think we're sure that that's what the new owners, whoever they might be, are thinking. So so it's very important again for the hospitality and tourism sector that there's competition with regards to the Hamilton Islands of the world and various other places.
We're pretty comfortable though, meeting clients, meeting suppliers, which is from the perspective of doing business locally. But like you said, you can only sustain an economy so much on that level of local activity without.
Yeah, I mean, it's an interesting thing. Again, I think people are comfortable doing it. I'm not sure that many people are actually doing it because people have got into a nice habit of doing it remotely. And I don't think that, and that's a bad thing either. So I mean, good for productivity. Not great for taxi drivers driving between North Sydney and the city. But yeah, it's an interesting thing. But most people are. I think I had my first meeting with an outsider this week. Again, I think it will be interesting to see, and we will start asking some of these questions about how business has changed in that regard. So I am comfortable to travel interstate, but I'm not going to because I don't need to, because I'm going to continue Zooming the way I am.
Some of the organisations that we deal with and talking to their kind of sales folk and some quite senior sales folk, telling me that it's fine working with existing customers on Zoom. You can sell them more. We've got a new product that we can sell that to new customers. Our biggest challenge is existing customers. Our biggest challenge is the new customers. We deal with technology vendors. We're dealing with fleet management companies, organizations and industry organizations that run conferences where people get together, network, open coffee, etc. And all of that is about new business development. And it seems to me that the challenge here is around new business rather than trying to sell more to your existing customers.
Yeah, well, I mean, that demonstrates that their marketing strategy is not where it should be. I mean, ultimately, business-to-business sales should be about inbound inquiry and driving inbound inquiry through the production of really good content like this. So, that's my view on it. And I mean, if you can't get new clients because your marketing strategy has not evolved from a we need salesman perspective, and I know obviously a lot of organisations do because of the nature of the product or service, but I would have hoped that there'd be plenty of people sitting around during this period have gone, our marketing strategy needs to evolve so that clients are finding us as opposed to us knocking on doors.
That's absolutely right. And I think, we've always had experience of doing that. It has been effective, and, content can really drive inbound inquiry. Now, when we think, will people be back to work? So, okay, we're kind of now getting towards the end of June. So that kind of indicates that around half have got staff already.
This is the majority of staff too. So this question's only asked of people who have staff. So it's not the one-man band people. So we get 56% of organisations saying the majority of staff are back in the office. It's very much skewed towards the smaller businesses, and those larger businesses are being much more cautious. So in terms of the actual numbers of people, obviously smaller businesses employ lots more people overall because there's lots more of them, but those larger companies have got big workforces. So again, I don't think Barangaroo, it's very Sydney focused, this, isn't it? So it should choose something in Melbourne. So, but I don't think CBDs generally are going to be bouncing along too effectively for, again, at least, I just can't see it really being strong until people have got a lot more certainty about what happens after the stimulus ends. So so it's going to be again very difficult for those hospitality venues in those areas that are relying on walk-by traffic and walk-ins, etc., etc.
That might not mean that everybody's in the office either, 5 days a week. It's not a full return.
No, and that's right. It's a majority of staff back in the workplace, but certainly not the majority of staff back in the workplace 5 days. And so exactly. So if you go, okay, well, we've got 56% of employees back for the sake of the conversation, and they're only working 3 days. That therefore takes you straight back down to 35% of what you were used to, right? That really doesn't take into account all the people who've lost their jobs as well. So. And they're not exactly wandering around having, lunch at restaurants and cafes, are they? So, because they can't afford it.
It doesn't paint a rosy picture for, the commercial real estate sector in the long run either.
No, I mean it's going to be very difficult, and I've already had a number of calls for us in this building, and people are saying this company's going, this company's downsizing, etc. So so the commercial real estate world is certainly going to be very challenged, and ultimately the shared co-sharing industry is going to be very challenged, and there's going to be some significant change in relation to that.
It's kind of almost reminded me of the GFC when the issue was about people's homes being repossessed, and people were just literally kind of handing back the keys to the lender because we're just saying you can have it. Almost seeing flips, something similar to that where people are kind of just going back to the commercial landlord and saying you can have it back.
Yeah, but it's not that easy, right? You're not allowed to break the leases even under the new rules, and so so it's at the moment. I think generally it's all very, people are being quite nice to each other, and my expectation is that niceness will probably diminish in the near future if things do pick up, especially because landlords are certainly wanting to get paid, and it's hard to argue with them as well, really.
Okay, well, talking about being nice, a lot of people thinking that the government's doing a good job. There are clearly a number of factors at play here, and I think it's identified in the takeout here to some extent. Does that seem to kind of be driven by the government's economic response, as it isn't much about their response from a healthcare perspective?
Yeah, I mean, it's one of those things. I think everyone's feeling a bit better, so that means that we feel a bit better towards the government to some degree. I mean, ultimately, it comes down to the management, it comes down to the cases. Not that it's shown in this deck, but there's plenty of satisfaction with regard to the way that the restrictions have been wound back. Not so much with the state borders, but I mean, I think what are people's responses to the 7.1% unemployment? Would that impact these figures, or will it impact these figures next week? I'm not sure it will. I'm not sure that's a surprising number, and therefore people will be going, okay, well, that's where we've got to understand that there's a lot more people unemployed and a lot more people looking for work and a lot more people not participating. But hopefully we're on our way back up, and these people will get jobs. Only time will tell whether that happens. So I think there's a cycle with regard to government support. I think it's to some degree attached to when people get paid their JobKeeper money, and that happens in the first week of the month for many people. And so I'd suggest that has some impact as well.
When you look at that by state, there seems to be a little, things are trending down a little bit there in WA and SA, where they've clearly got state borders, although Queensland's a little bit up.
Yeah, it's surprising, really. I mean, the WA and South Australia have been the happiest, and so this is their satisfaction with the federal government.
Yeah.
Now, I don't think a lot of cases they don't really distinguish. I'm not happy with the government, or I am. Don't care who it is. So I would suggest South Australia and WA, because obviously they need people from the eastern states going across there. And vice versa, they need to move out as well. So there's been some movement with South Australia this week, so that should turn things around. Victoria is going up in terms of satisfaction with the federal government, which again I was slightly surprised about to some degree. So, but yeah, Queensland, I would have thought Queensland was the one where the state border issue would have been the main problem, but their satisfaction with the federal government doesn't seem to have shifted. So it'll be interesting to see how those play out. But again, from my perspective, I just think that for business to get back to normal as quickly as possible, we need to get it sorted. And again, if everything's going to be the 17th of July or whatever, well, that's fine. But it's still a way away.
Yeah, speaking with one of our fieldwork suppliers out in Perth, and she was saying that one of the biggest problems they're facing is that no longer there's no research agencies from the eastern seaboard coming over to use their group rooms and so on.
Right, exactly.
Okay, back down to the big question though. Will they survive? I think we're still where we were a month ago, which is that they will, but there is still this kind of cohort sitting around quarter mark that are still very concerned about their survival. I'd imagine there'll be that same kind of cohort that are not seeing revenues returning to pre-COVID levels until kind of next year. So we know which industries that they're in and so on. Again, going back to the data that the ABS publishes about business formation and business failure, or business exits, 27% is double the normal business exit rate, and who knows what's going to happen to new business formation.
It's a worrying number that the number that's very concerned has not diminished since the 10th of May. There's no doubt about it. So there are a lot of businesses that are hanging on, and we're not going to get any change in those numbers until we get further into the journey, and they could quite easily start ticking up is what obviously worries us, and I just keep harping on about the same thing. It's not going to change if we're too slow in opening borders, and I get the health considerations and the health concerns associated with that, but like I say, another month is probably too long to be hanging around waiting.
And in terms of being able to come back to this point about certainty and having some level of predictability, we're clearing out the end of this financial year now and moving into the start of a new financial year. So businesses are in that business planning cycle. It must be very difficult to put a business plan together for the updated business plan for the next 12 months, because there's still so much uncertainty that one would have to factor in. Still need to go through a planning process, but maybe we're just planning quarter to quarter rather than over a 12-month cycle.
Yeah, people are planning to survive, and shorter planning periods are not a bad thing for businesses anyway. So we're planning to survive, and then after we've hopefully survived the first quarter, then we plan to survive with no stimulus, and then we plan to get into 2021 and see where we're at, and then hopefully then we can plan to grow. So you're right, the end of the financial year is an interesting time. Obviously gives businesses the opportunity to clean the slate, clean up the balance sheet, make no profit, so they don't have to pay any tax, etc., and then kick off and hopefully move forward with the level of positivity, with again staff coming back to work, potentially people starting to travel around a bit more, etc. So
some bad news for the tax office. They're not collecting those tax revenues to go and pay back the government debt.
They're more interested in giving it away than they are in fact
right now.
God bless them.
think as cases go down, concern about personal health and well-being is kind of plateauing around that 56, 57, 60% mark in terms of those, being concerned, but we're still not out of the woods yet.
No, it's on its way up. I mean, again, this question is not about whether people are worried about getting COVID. This question is about how stressed are you in your day-to-day role of leading a business, and this is a clear indication that this is a difficult process. You've got, you yourself as the business decision maker have been sat in the office or whatever on your own. You haven't had to deal with staff in the same way. You haven't had to deal with cash flow issues maybe in the same way because you've been getting job keeper payments. You haven't had to deal with suppliers chasing you for money. You haven't had to deal with lots of different things. And now all of a sudden you've got to go back to dealing with all of those things that, maybe you don't like dealing with. So small business people particularly tend to be a practitioner, an expert, a master of something, as opposed to necessarily being a person who's interested in the business. And so so these issues about reigniting these businesses and managing people, the processes, the technology, the sales, the marketing, and all of that through the recovery stage is bloody difficult, and so that causes stress. So those stress numbers, if I'm correct, will continue to go up as we again get closer to the cliff in October. So so no surprise for me. The lowest level of stress was the 10th of May, which was basically in the week that I think that probably the second or the first JobKeeper payment was made.
That's right.
Oh, this is great. The government's paying me money. I don't have all these people to think about. I don't have to worry about clients and great. Have a bit of a relax. Well, now we're on the way back up. It's not very relaxing. So again, it's going to be stressful, and then that's, people need to understand that, and they need, because there are going to be individuals that fall off the perch at the end of this because they just haven't been able to manage those stress levels.
Pretty much already said that the next 3 months are the most critical phase in determining the survival and future for those SMEs. Are you still feeling positive, James?
Yeah, I mean, again, we like to be glass half full. There are signs of recovery, both short and medium term. Next week's data is important. We want to see that upward trend continue. We've got declining concerns about business survival, but as Steve implied, there's still that 25%, 27%, whatever it is, that are very concerned still. People are willing to get back into the workplace. People are willing to travel. So I hope that's an indication of an uplift in economic activity once they can. And they're still confident that the government is doing the right thing, despite not opening the state borders in most cases yet. The underlying indicators are that sentiment is growing and people are ready to do business. But my view again is that while most SMEs will survive, I do feel that the need for further support, further stimulus will be required past the 27th of September, because I just don't think there's long enough for activity to rebound in the current state, and even when borders are reopening.
I think the point we made, in the previous webinar about the services sector in particular, it's kind of not like retail where you can turn sales around fairly quickly. So the pipeline that needs to be built up, is often generated over several months. So to your point about that kind of the next 3 months, the pipeline is being built now for revenues that will be generated in September time and so on.
That applies for the construction industry as well as the services industry, and certainly a lot of people in manufacturing as well. It's not as if everyone's going to be throwing $1 million to make widgets or whatever it might be straight away. So you're right, we need some time to be able to build that pipeline back up. I hope you valued the information today, and as we move forward, there'll be another webinar at a similar time in July. Thanks, everyone.
Thanks, everyone.